I don't think anybody expects that Iran exports will ultimately go to zero. They're exporting about 1.3 million barrels a day right now. I think that some of that oil will continue to flow to market, as you mentioned, through the black market. So some oil will be smuggled through Iraq. Some of it will go through in non-dollar denominated transactions. So some of that will still filter through, but it's certainly a bullish story for the market because we are talking about the loss of potentially up to 800 or 900,000 barrels a day of Iranian supplies.
Obviously, crude's had a big start to the year, but why do you think the market, given Iran, given Venezuela, given Libya, is not higher than $63 traded in the United States?
I don't think the market's fully priced in the Iranian story yet, and I think that there is further upside. We're still lower than where we were a year ago. We're certainly off the lows, well off the lows of the high of where we were last year, well off those highs when the market was fully pricing in Iranian exports. So I think that the market has room to tighten a little bit more before potentially petering out at the end of the year.
Yeah, it's said a different way. We're sort of kind of still down year over year. This year has been a good. Yeah, it's 5:03 in the morning. Tomorrow, don't worry about it at all. You know, because here's the weird irony, I suppose, is that if they do continue to sell like they have before, they probably will have to sell at a discount. You're not going to take a full-priced tank of supertanker oil because you know that you've got to kind of do it surreptitiously. So there could actually be maybe a negative on certain price points around the world. Could there not be?
Yeah, depending on the grade, but that's the point, that there are always going to be buyers, particularly in India, where they're really thirsty for barrels, that they're going to want Iranian barrels at a discount. So there definitely will be a market for it. Some of Iranian oil is condensate, some of it is a heavier grade, so it's not easily replicatable by other sources. Shale is a very different grade of oil. So there are some refiners that really are desiring that Iranian grade.
Okay, let's switch gears entirely if we can, because you work at the Nasdaq, right? Home of a lot of stocks. Obviously, the Anadarko, Occidental, Chevron sort of deal flow, triumvirate thing, whatever you want to call it, has gotten the most attention on the street. The big question, of course, is very simple. Is this a one-off or the beginning of another round of oil M&A? What do you think?
I think we're in very interesting times in the U.S. shale industry. We could probably do a whole show just on that topic. We talk about these E&P companies, exploration and production. It's really quite a misnomer. No one's exploring for the oil. We know where it is. These companies are moving into manufacturing mode. So the days of scrappy independent companies driving innovation, that's no longer the case. In the state of consolidation that we're in, or manufacturing mode, really companies need to have scale and efficiencies. So that suggests that they do need to be bigger. There are over 70 onshore publicly traded E&P companies. That number is really too large. So I do think that we'll see more consolidation, and that will make the space more investable and really catalyze.